what does your vision for the future look like? What does this actually, what does a world on not just a sound money standard look like? Because we could have a world that has that, but where there is still complete and perhaps more strengthened US dollar hegemony because we've missed the medium of exchange part,
Yeah.
and we've just focused on the store value. What does it look like in your view?
Yeah, that's actually why these things are incompatible over the long time together. So in one system, Bitcoin, if it stays decentralized and secure, then all prices fall relative to it. To stay decentralized and secure, it requires being a medium of exchange. These are the tools, these are the early indication tools or protocols that are going to ensure that it remains decentralized and secure, and ensure that it moves into a medium of exchange. Without them, it would be highly likely that it would get captured. Because through essentially all you would do is US dollar to gold, US dollar to petrodollar system, US dollar to Bitcoin, nothing would have changed. Right. And that, and I would say the vast majority of even Bitcoiners, today, because the Bitcoin, there's such a deep hole, are still measuring Bitcoin in price in the US dollar. And so I saw one of the questions that'll help people understand what I'm talking about here. And we'll try to kind of look at it from both systems in the question, but it had something about the financialization, right? Something and help them to understand pricing in Bitcoin. And so over the last 30 years, everything you've ever known, and most people have made all of their money, not really made money, the entire wealth of the world is an artificial construct of extracting from some people, giving it to the other through an instrument of financialization. And through that financialization of lens, then it would look like houses have gone way up in price, because they would act as a store of value, because cash couldn't act as a store of value, because it was an inferior store of value. So you'd have to find other stores of value. Those stores of value became houses, those stores of value became stocks, and you start getting higher and higher bid prices on all of these stores of value that reinforce, instead of a house being a utility where you raise your family, it becomes a store of value. And then everybody races into the store of value, because if they're not in the store of value and only in cash, they're getting destroyed. So everybody goes and makes the same trade, pushing it up higher and higher and higher, further away from its utility value as a store of value. And then enter Bitcoin, and enter Bitcoin is repricing all of those to their utility value and or the marginal cost of production, everything on the planet. So if you measured both those, this house, I've said that before, was $1.4 million 4 years ago. Now it's $2.1 million Canadian pieces of paper. In Bitcoin, it was 300 Bitcoin 4 years ago. Now it's 22 Bitcoin. In 4 years, this house will be 2 Bitcoin. And so all Bitcoiners are facing the same choice. When do I want to buy this asset? Because a lot of Bitcoiners want to buy a house, because they've been so locked out of the housing market because everybody's racing into it, leveraged against it. And so they can't wait to spend their Bitcoin on a house. And everybody is able to make that choice whenever they want, but it's going to keep happening, right? In 10 years, this house might be 0.1 of a Bitcoin. And so if I had a whole bunch of Bitcoin, as Bitcoin is repricing this into the house to its utility value, I can make a choice anytime to be able to use my Bitcoin to be able to price my house. If I price it today, what I'm really paying for is a way overpriced house, because people see it as a store of value, and it's a really bad store of value compared to Bitcoin. Really bad store of value. Now, if you want a house because of your family and your neighborhood and everything else, you should do that. You should do whatever you want to at your choice. But if you're in the store of value that everyone else is in because it's the only game in town, there's a new game in town.
In a move that has shaken the cryptocurrency world, a dormant Bitcoin wallet has suddenly sprung back to life, moving a staggering 14,000 BTC. This surprising shift has sent waves across the market, especially considering the digital asset's fluctuating price, currently trading at around $97,000. Major industry players like CryptoQuant and top traders are buzzing with speculation about this sudden activity. Is it an indication of a larger shift in the market trends? Welcome back to Investocracy Crypto.
I think that is it's a tough pill to swallow. It's going to be for a lot of people. But I think it's a very good one to swallow because that's what your house should be, right? Like it should be where you should be buying it because you say, well, I want to live here with my family. I want to raise my kids here. I want to make memories here. I want this because of the utility that I get out of it.
100 years ago, houses look different. They look like a neighborhood of young families, that was a community. Houses don't look like that anymore because all over the world, in other currencies that are debasing just as fast or faster, they're trying to get into your stores of value too. So this is how. So you have a global phenomenon bidding up houses far beyond the utility value as a store value, and all of the debt underlying that is contingent. It's a contingent liability against the entire system. So it has to keep going higher because you're having to debate. Because if that debt became due, if you didn't inflate that debt away, it's over. The whole thing crumbles. And so those assets are a core part. And so is commercial real estate, and all of these things are interlocked into inefficient stores of value. It's really terrible stores of value, but they were the best thing. They were the best stores of value for the last 30, 40 years. So everyone rushes into that trade thinking that I have to have a house to protect my wealth.
Well, and the sad thing is too, that if you look at like the compound annual growth rate of the money supply, depending on what you look at, like, but even just in the US, you're looking at like high 6%, close to 7% for the CAGR of the money supply, which is also over a longer period about what the housing market increased by. It's about what the S&P increases by. It's about what everything that is supposed to be a benchmark or a good place to store your value increases by. But that means it's not increasing. You're just treading water.
As Bitcoin enthusiasts and traders attempt to fathom the significance of this massive transaction, the market has shown signs of resilience. Even with a recent 2% decline, the digital currency is holding steady while intrigue around the market intensifies. CryptoQuant's data reveals a decrease in BTC's supply on exchanges, similar to levels experienced during last year's FTX collapse. Amidst all this, QCP Capital has drawn attention to Donald Trump's recent economic comments, pointing out potential ripple effects from his announcements regarding tariffs and possible sanctions.
The other half of the equation that's stolen from you unnaturally is the actual deflation rate that should be in a house. The actual deflation rate of all the materials and all of the other things that as efficiency. Think about what a lumber mill looks like today versus what it looked like 100 years ago. Think about what any mining looks like. It's all completely almost automated. And these things are highly efficient operations that would mean all of the different products relative to the house should be far cheaper, not just neutral. So prices should have fallen in all of it.
And I think that is perhaps one of the most difficult things for folks to understand, even if they may understand that, okay, inflation is this bad thing and I'm feeling poorer because my purchasing power is dropping because of inflation. They're not actually seeing the extent of the rot that is there. They're not actually seeing the extent of the theft, which is you're not stealing, as you said, you're not stealing from the baseline. You're stealing from negative. You're stealing from deflation, and then making up for it, and then some.
Right now, and as a result of that, you have to make bad investments, right? So you have to misallocate capital faster. Why government expands? As a result, you have to constantly misallocate capital faster and constantly create next waves of hype to be able to create more misallocation of capital, to be able to drive this instability in the system to ever increasing, which is a centralization of a function. Most people, even if you said today, people measuring the CPI and they're cheering because CPI is starting to come down or not coming down quite fast enough, and then there's going to be lower interest rates, so there's more liquidity. They're actually cheering, the market is cheering, you're going to have to debase currencies more.
Some market players, including QCP Capital, speculate that these political shifts might impact BTC's path, perhaps adding an element of volatility that matches the ebb and flow of market sentiment. In the world of digital currencies, unpredictability is an old friend. Institutional investors are rumored to be quietly accumulating BTC during these price dips. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's wild. It's wild, and they're all measuring from zero inflation instead of the implied productivity rate in an economy, which should be negative.
It is kind of crazy that, like, I feel like a lot of people also get to perhaps this nihilistic point where it's like, yeah, screw it, print the money, pump my bags. Like, I hold enough assets. They're all gonna just go up like gangbusters when you start easing like crazy and getting that printer humming again. But what a sad state of affairs that's where we've gotten to, where it's like, well, yeah, even for people like a lot of Bitcoiners were like, well, yeah, I know it's theft. I know that inflation is theft, but, you know, at least that theft is pumping my bags too. And like, I get it, you know, you're in the system, play the system for what it is. But I think it's kind of sad at a certain point.
So it is, then you could say the positive side. All of these individual actions in this, when somebody is going to sell their Bitcoin for US dollars and then make that trade, is just going to create more hardcore Bitcoiners and more people who understand this. If you think about all of the positive in this network and all of the people, even through these conversations, that you get a nuance that's a little deeper, takes you somewhere deeper. And then once you're into that, you can't unsee it.
As the winds of the cryptocurrency market continue to blow unpredictably, there's no denying the excitement brought about by the recent movement of this dormant Bitcoin wallet. With predictions of upward trajectories and cautious optimism from analysts, now might be an opportune moment for investors to seriously consider the potential that Bitcoin still holds. But what do you think about the current discourse around Bitcoin? Are you convinced by these bullish predictions, or do you foresee a different outcome? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.